The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, let's put it this way. Feeling a little rough, Lewis. Anyway, I have a tiny bit of a cold, but we'll get through here. Folks, I don't have the DAX up today because of the technical difficulties, i.e. the gentleman that always sends them to me is not there today, so I won't be able to send those on. But I will tell you from looking at it myself that all we've done yesterday in the DAX was virtually nothing. It had nothing of the move like we had in our market, being up 2 or 3%. Some of these markets 3% in the Nasdaq, of course, but that's not important. The FTSE did exactly the same thing as the DAX, slightly higher high, then moved lower. Not very much happening there. The first chart that I've posted in here for today is the E-mini S&P, and yesterday's high was 2745. That was a 61% retracement off of that previous high. But the most important thing for all you Fibonacci lovers, do you know what happened in the Dow Jones yesterday? Judge's ruling, it was up 618. Now, how do you believe that in Fibonacci? Hello, Federal. Anyway, that was probably nothing more than a big coincidence. Two things happened that I think are very important technically. Whether you want to pay attention to it or not is up to you. But in the Treasury bonds and Treasury notes, we had a pretty big move because of the Federal Reserve jawboning, whatever you want to say it is, or that's what it is. But we have a rollover situation where we're rolling from the December to the March contracts. Now, if this was really bullish yesterday, we would have had a increase in open interest in the March far, far greater than the decrease in the December, but that did not happen. There was a big decrease in the December open interest, but not a corresponding increase in the March futures for both the Treasury bonds and Treasury notes. That is not bullish price action, folks. It really is not, because you've got to have new buyers coming in, and that basically, that big move yesterday was predicated on the fact that shorts began to cover, and that made the market move a great deal up, and then now it's backed off a little bit. Now, if we look at the gold trading from December to the February contracts, the exact same thing happens. We had a big move, $17 in gold, and nothing happened in the gold market other than the open interest was decreasing, and that is short covering. That is not bullish action, in my opinion. And as you know, I only look at that on really wild days, and we'll cover that in just a little bit here. I wanted to try to explain, because I had several emails about the fact that we had no aspects yesterday, and that is basically one of those P-index dates, and I'll go into that when we get to the previous after we get through with the section that I'm looking at right now. Now, I did want to mention, when we were on the air yesterday, we were looking at the copper chart. As you recall, David White posted a chart of COPX, a copper mining stock. It was ready for a Gartley buy. I know it acted, well, it must have acted pretty well, given the fact that you can see what happened to the copper. We had that 135 pattern, and yesterday's low, you can see we rallied well over 10 cents a pound in copper, which takes it up to the, which is $2,500, which is basically similar to the type of move that we had in gold and also in silver. And silver is also in the open interest scenario. The switch over from December to March also did not show any increase in open interest, so that the buying that was occurring in that yesterday was short covering. And that's a simple formula to use, because if the prices are going up and the open interest is dropping, that is short covering, and that is not a bullish scenario. You need players to come into the market, and that is in fact something that we really need. Folks, there's one market that is here that is very, very close to what I think is a major bottom. It might have been today. I'm not sure yet, but I think it's really close, and that is that crude oil market. If you'll remember, Mr. Z posted the crude oil chart on the Brent crude, and if you'll notice here, I'll put it up here. Oh shucks, shut the front door, raise the rent. Bear with me here 1 second. I hit the wrong button as usual. Let's get it up here. There we go. You'll see we're right back to that same level in Brent crude that we were. We took out those lows in the spot crude by just a little bit, and then we rallied $2 a barrel. That's a pretty good sign, I would think. That this could be a possible bottom in the crude oil. So keep an eye on it. One of the other reasons that I think it's a possibility is because we're within 1 day of that 28th, which was and you can see, I'll show the volatility of what happened yesterday. I don't know if it was related to that index date or not, but when we get back from the break, I'm going to show you how that research started, and you can make up your own mind. You can see the statistics behind it, and believe me, we have a lot of data, so that you'll have to remind yourself that that's important. And if you listen to Steve Rhodes' show, Steve always covers that, as I recall, and he does follow it very, very closely. I watch it here because I get Norm Winsky's astro calendar, and I watch the full moons and the new moons and stuff, and when I see a blank day like we had on the 28th, that certainly means something. Now, how do you know whether, what's going to happen with the Federal Reserve talking? But, we were at really serious support yesterday. If you recall, we were talking about the bottom that was coming in the euro. And you'll notice that we were looking for that bottom to come in around that 113 level. And the low was 112.70, I believe, 30 pips below that. And then it had the tremendous move to the upside, and as we look at that, you'll see right where we stopped here this morning in the euro. In fact, it's already backed off about 50 pips from that 61% retracement from the high on the 20th, came in at 114, and it was also the 78% level, and we're down about 50 pips from that already. So that is telling you that's what you're looking at. And the same thing happened in the currency markets with the others, and that is the fact that there was no increase in open interest in the March versus December contracts in the futures market. But frankly, that futures market is such a small part of the forex market that I don't really follow it that closely. It's good to trade because you can trade it for like $3 or $4 in and out. Whereas if you buy a euro, they're going to trade 1 or 2 pips, so you're going to pay a lot more commission if you trade through a forex bank than if you trade through the Chicago Mercantile Exchange. So that's, I guess, a subject for another story. But we got the break coming up here in just a minute, and when we get back, I want to talk more about that astro aspect that was yesterday and just show you how it started and where it came from, and you decide whether you think it's useful or not. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart from page 83 in the book, Astro Cycles, A Trader's Viewpoint, because this is where the whole thing with the aspects started. What happened was when we first started doing this book, we had a very dear friend. In fact, both Jim Twentyman and I had been the broker for, wait, we're showing the VIX. I'll cover that in just a minute, Mr. Z. Mr. Z asked a question about the volatility index, and I'll cover that in just a second. But when we were at Drexel together, I started in 76. Jimmy got there in 78. I left in 82. Jim left in 83. But during that time, during the 70s, we had a customer together, Neil Michelson from Astro Computing down in San Diego, California. And we traded soybeans for Neil, and we got a little bit lucky, and he did pretty well. So when it came time to, look at this book that we were doing, this was now 1986, I contacted Neil. Unfortunately, he was in stage 4 cancer, for pancreatic cancer. He passed away about 9 months later, but he gave us all of the data. And what we did was we would ask him, Neil, can you tell us the dates that we had somewhere between 14 or more aspects on any one day, or 3 or less? And all we did is he had the data for the Astro going back forever, because that's when it started. But our data for the stock market and stuff went to 1896. So these aspects, you're looking at the number of days that we did. You have 255 trading days a year. And if you did this over a 100-year period, you're talking a lot of aspects, so you have a, tremendous statistical sample. So what we did is we matched up the days when there were 14 or more aspects on the plus side, or 3 or less on the downside. And that would usually mean there would be a pretty strong probability of the stock market making something major, a major move at that time. And I'll just post the, there's all kinds of, statistics and samples that we have about this. But the one I wanted to show you is the one I picked out, which is on, I believe, page 84, the next page, because that was the one we were watching. And you'll be able to see here, this was the This was the S&P, way back in 1987. Now, you can see here, this was before the crash. You'll notice that high that you're looking there, that high you're watching there in August, that was the big, what do you call it? The harmonic convergence, where we had 5 planets all in the sign of Leo. That was August the 25th, 1987. But if you notice those little black arrows, those were all P-index dates where there was either 3 or less or 14 or more. And yesterday we had 0. So why it occurs or not, I don't know. I don't know if it had any meaning on the stock market or not. That's beyond my pay grade. But that's what we were looking at. Now, Mr. Z asked a question about the volatility index. And I believe the volatility index is something to be in, and put it into your portfolio and leave it there. Folks, if you remember, the volatility index got down just a little bit below 9 about a year ago, and then we had these big moves. We had the one that went to 50, which was in January of this year. Then it's backed off, but you notice the back off now is always staying above 15. To me, what this means is some professional people are out there taking protection on volatility, because folks, let's look at the picture a little bit here. Volatility is increasing, boys and girls. Look at this volatility we had yesterday, and that's just one of the days. We've had several days now where the Dow Jones has moved 600 points. Now remember, the biggest move down in the Dow that we've had in this last run was in January, when we were down, I believe, 1,100 points in one day before it came back. Of course, that was 1.618 of that number that we're looking at, of around 600. So you're going to see another move, either up or down, most probably down, because fear is a greater emotion than greed. When you're looking at fear, you have physical symptoms. You have diaphoresis, or sweating. You have your dilated pupils. You have your fingernails, and you show petechia. In other words, the blood rushes to your heart instead of staying in your extremities, and dryness of mouth. And all of that you can see in fear. With greed is related to complacency. It's, how much more can I make? That kind of thing. So remember that fear, that's why the markets come down faster than they go up. That was explained to me by my friend Mark Douglas. But anyway, that's what we're watching. So keep an eye on that, folks. It's I think that volatility index is going to see 75 to 80 sometime, probably early next year would be my guess. Someone's asked a question, do I think, okay, Marshall's asking the question, are P-days only good in the stock market? Marshall, I don't know the answer to that right off the top of my head, but as I recall, I use it for other things. You can see what happened in gold yesterday. You can see what happened in the currency markets, all of that stuff. The euro went from 112.65 all the way up to 114. So, that's 140 pips. But, when you look at it, overall, nothing really happened yesterday. There was a huge rally in the stock market, but, that's where all the action was. But, the other markets were moving also, but they went to just normal levels. I mean, the euro didn't go anywhere crazy. The gold didn't go anywhere crazy. The bonds didn't go anywhere crazy. It was only the stock market, and that, I believe, was because we were coming off of that monster 3 drive to a bottom pattern that, we focused on, in the newsletter. And then we also focused on it on Monday, too, because that is a major bottom. And we look at all the FANG stocks, they were doing the same thing with the exception of Google. And Google was making a double bottom as opposed to the others, which were, all making double tops and stuff. So just take a look at Google. You can see the fact that when the others are making that 3 drive to a bottom pattern, Google was making a double bottom. And, Google had a big rally yesterday. Everything rallied. The only thing that didn't rally yesterday was Tiffany and a couple other stocks. But we'll see whether, that means anything in the long run of thing. But that's my feeling on the VIX. Whether I'm right or not, I don't know. But I think people are taking protection over a long period. Now, the $64 question is this high in the S&P going to hold? I'm not really sure. If it doesn't get any higher today, I mean, we had a 60-point move in the S&P, which is certainly an outlier event. And if we don't get any higher than that, that was nothing more than, I didn't even check the open interest yesterday. Oh, that's a baddie. I got to do that. I'll do that when we take the break right here, and I'll get back to you on that. That was on my list, and I missed it, but I will check the open interest in these for the stock indices when we get back from the break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to put the chart of Bitcoin up here because we've had a request. We did make that target that we were looking at, which was $3,800 a share. The low that some people are showing is around 3,600, but there were some of these exchanges that showed a price as low as 3,200. But frankly, at that time when it was really crazy, the bid offer was over $200 to $300 a share. Most of the time when you're trading Bitcoin, the bid offer is between $50 and $100 a share when you're down at this level. So, you know, this thing is not for the faint of heart, folks. So make sure that that you have to pay really close attention to that, because it is something that is well, from my opinion and my point of view, it is certainly worth the price of admission. Now, the next one I wanted to cover is the pork bellies of the energy complex, which is the let's get this up here so we can see it. This is the this is natural gas. This is the December contract that is getting out. Will be going into delivery here. You don't want to have anything to do with that puppy when that happens, because that thing is really crazy. But it has, it has $4,000 or $5,000 moves almost all the time, whereas having a $3,000 move like we had in the E-mini S&P is pretty much of an outlier event. So if you like the action and you can stand the heat and like being in the kitchen, keep an eye on that natural gas contract, because it trades nicely off the patterns and the fib numbers, and the executions are pretty good. And it's just a very nice tradable market that we're watching here. Someone's asked a question again, and I'll try to answer it about that. The S&P, whether I think that high at 27.45 is going to be the high. If you were to ask me to make a bet on it, I would say possibly no, and the reason why is because of that big, strong trending day that we had yesterday. Now, this is Thursday, if by tomorrow we have not exceeded that level, then I would say yes, that 27.45 is going to be something that I think is going to be, relatively important. But, so far, all we've done is after we made 27.45, we've come down, just about, 15 points down to the 27.28, and now we've rallied up 10 points from there. So there's not really much to say with that. So that's what I would be, watch it very, very closely, because that's what seems to be going on. Whether that's actually what's going on, I don't know. But if we get above that 27.45, that's telling you that fib number is no longer valid. And that's what I'm looking at. Whether that means much or not, I'm not actually sure. Now, the NASDAQ went quite a bit above its number, so that's another positive factor in here. And remember, that 3 drive to a bottom pattern that we had on that daily chart for all those FANG stocks and the stock indices had to be something pretty important, and it was coming in over a pretty strong cycle date. If you remember, Norm Winsky, I think, was predicting somewhere around November the 23rd, which was, whoa, that happened to be a full moon. We had a pretty good bottom in that. That was the Friday before we came in Sunday night when it took off. So that hats off to Norman, call it by the minute Winsky. So we'll keep watching these things as we go through some of these others. Now, one of the questions that we've had is, hold on one second. Steve is asking a question. Do you think the Dow are now in an ABCD up? Steve, I haven't looked, but let's do that right now. Since we have a minute, I can certainly do that and post it in here. I can get the old transports up and take a look at it, and that would give us a little bit more to look at. Oh dear, I don't think so, Steve. I think it's got more to go, because we haven't made. Let's get this up here. I'll put the pattern in, and then we'll discuss it here in just a minute. All I have to do is to draw the ABCD in, and I believe we're going to be up. Yeah, that's what I think. Here, double check this one on me. Yeah. That's exactly what I think it is, Steve. We get up another 250 points, you'd have a beautiful Gartley pattern up there near the 11,000 mark in the transports. But I don't see a whole lot other than that. We did take out the highs of November the 5th, and we've already taken out yesterday's highs, which tells you that there's certainly not a lot of selling coming into it as of yet. But I don't see any reason whether that would be much of a problem or not. That's what I see. I hope you see the same thing, and if you don't, I respect that also. Okay, let's move on to something else, and that is the Steve. One other thing, since you're here. You do quite a bit of work with the P index, don't you? You follow that quite a bit, as I recall. if you have any comments on that, be sure to post them to the folks, because it's a very good one. It doesn't happen very often, and that's the thing, is that when you do see them, but yeah, there have been very few this year, but when they do, you need to sort of pay attention to them. That's one of the reasons why I use Norm Winsky's Astro Calendar, is because you can see quickly. We had one on November the 5th, was rather small, and then we had one on when the market was closed on Saturday, November the 3rd, but there's no trading at that time. So we'll keep we'll keep you informed on when we see these dates. Remember, these dates, folks, they are probabilities. They're not certainties. A lot of these things don't work. Some of them do. Okay, the definition of a P index, we're going to do it again. I'm going to post it up here since you asked. Let's put this up here for Maria. Okay. If you'll notice here, this is a standard deviation. It's it's at the 95% level. In other words, when you see the 14, that means there's 14 or more aspects occurring on one day. That means you're in you'll see the first percentile right there is between 8 and the first hatch mark. So you're 2 standard deviations out. Means that you're at the 95% level. In other words, that only happens about 5% of the time. And the same thing, if there's 3 or less, you'll see on the right side, that's the same thing. You're 2 standard deviations from the mean. And that means that there's something out there. I've always felt, actually, Rob Hand, one of the premier astrology guys that I met 30-some years ago, explained that it was probably related like a magnetic attraction. Al Larson also felt that it was pretty much that particular thing, but it was Dr. Miller that had the idea. When I wrote the book, she would not allow me to call it the Miller Index. She made me call it the P index, and that was the thing that Frank Tauscher from the Super Traders Almanac really liked, and in fact he really followed it very, very closely. And anyway, that's it's pretty good. We watch these dates, and when they come up, we'll try to tell you, but you've got to use it with some common sense. Yesterday happened to be one of those days when the euro was sitting right at that. We posted it here, several times. It was right at the 78% level, and yes, I take it. I take that with a glass of wine too, Maria. Anyway, we'll be right back. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I've posted the chart of Deutsche Bank. It's under the gun again today over in the UK. In Germany, it's basically what's happened. It's actually Germany, not the UK, but it's under examination for potential money laundering. Evidently, the federales over there raided the offices of Deutsche Bank, and they're evidently being accused of money laundering. Gee, that's really surprising for a bank, money laundering. Quite interesting. Now, someone's asked a question, how do I handle those real wild days and what do you do the next day? Folks, when you've got a big day like 60 handles in the S&P and up 600 in the Dow Jones and 210 in the NASDAQ, the only way you can control your risk, in my opinion, is to move to a smaller time frame. And the smallest time frame that I would be willing to watch would be the 15-minute chart. So if we post the 15-minute chart for the E-mini S&P, you're going to be able to see here that yesterday you'll see that 3 drive to a top pattern that occurred between 1300 and 1500 hours. That is between 3 and 4 o'clock New York time when the high was made. And then since that time, you'll notice that we came down 15 handles, and it was right at the 61% retracement of point X of that 3 drive pattern. So, and what we're doing now is, if you're looking at this closely, you're sitting right at the 61% retracement of that move. But frankly, you don't have an ABCD pattern in here to give you any, any other numbers to look at. So all you're looking at is the fact that we're rallying, 10 handles, which is, that's the harmonic number is 5.5 handles. So we're right at that 61% retracement there at 27.39 right now as we speak. So if you're trading this and you wanted to sell it, that's the place to sell it, and you put your stop, which would be above the 78% level, which would be at 27.42. So you're only risking 5 handles or $250. Well, $250 on a $140,000 contract, that's about as low as risk as you're going to be able to find. So pay attention to that. The question about Deutsche Bank, the reason why I posted it is someone asked the question is, where can you buy Deutsche Bank? And as you can see here, we've been looking at this long-term 1.618. Let's put that up again because I think it's important enough to pay attention to, because there's no way Germany's going to let their flagship bank go tapioca. It's not going to be like Lehman Brothers. They'll do something. It might be at a lot lower price, which we think okay, hold on here just a second here. There we go. You'll notice here that we're looking at about that 1.27 expansion comes in. Excuse me, it's 1.27, not 1.618. It'll be 1.618 on the June to December level, but that comes in at 850, and we're trading at around 940 right now. So we got another almost 10% in Deutsche Bank to get down to that level. And frankly, if you're going to buy it there, I wouldn't risk more than 50 cents if you're, and this is not a recommendation. I'm just looking at the price chart of Deutsche Bank that has been bearish ever since January, when they were kind enough to give everybody a 30% discount to buy it when it was trading at $20 a share, and you could buy it for 17. Let me see. It was 17 then, and it's 9 now. Let me see. What's the return on that? That's not a positive return, I think, because if you put in $1,700 and you now only have $950, yeah, that's not very good. You want to do the opposite of that. You want to be like Starbucks and buy it at 59 and watch it go to 66. That's the kind you would like to take a look at. So that's what we're watching here in some of these markets this morning. So pay a little bit of attention to it, and we'll see how we're doing. And that's really all what we're watching here this morning. We'll take a quick look here. I will repeat what I said. There's a pretty strong probability that we might have made the bottom in the crude oil energy complex today because of the expansion numbers that were down there, and we're just hovering right at that. And I'm not sure. I don't trade Brent, so I'd have to ask Mr. Z whether Brent made new lows on the move, because if that didn't, that would be a multiple confirmation. Mr. Z, if you're listening, would you double check to see if the that meeting is not for sure on the two people, China and Europe, from what they China and U.S. Terry, I'm not sure of that. I don't think it's a firm meeting, but I'm not sure it's the same one. But if anybody knows whether the Brent North Sea crude made a new low or not, it would be very important. That would give confirmation that the crude oil complex has made a bottom, and it's probably getting ready to do the getting ready to have a pretty substantial move to the upside. So if someone has that data, I would wish they would put it into the den to give us a clear indication, because I don't really have that. So we'll see whether this is going to happen or not. We got the break coming up here in just a couple minutes. I wanted to cover one other question that someone's asked me about, and that is the notes and bonds. The notes went just a tad higher than that ABCD during that big run up yesterday. They're now back down below it again. I believe this was nothing more than an ABCD pattern in both notes and bonds. And I think that it's got a pretty good chance to have higher interest rates coming in. Actually, I listened to parts of Mr. Powell's speech because I wanted to see why the markets reacted so much, and I think it was just pretty much emotionalism from what it looked like to me. But we'll have to we'll have to wait and see if that's going to be the case. So that's neither here nor there. I still haven't heard from anybody on whether Brent oil made a lower low than the WTI. I'm not sure of that, but we'll try to get that answer before the show ends up today, and we will keep a close eye on that one also. Another question someone's asking about the copper. We had a 10-cent move in copper that went right up to the 78% level, spot on. So there again, that should be major. Yes, Mr. Z is telling us that Brent did make a lower low and then also reversed higher, just like we did here. So thank you. I didn't have a chance to read those notes, Mr. Z, but I will during the break. But the Brent did make a new low, so that possible divergence is not a factor. But the fact that we've been able to rally $2 a barrel here early in the morning tells us that we're probably getting a really close type of action where we might get a $5 rally in crude oil, which is $5,000, but it is a strong probability because it is certainly oversold by any stretch of the imagination here. That's a real key one here. We got the break coming up, and then we will talk a little bit about the importance of this open interest that we talked about in the treasury bonds and in the gold, because that's where you have to have the players coming in. And so far, we haven't seen that, and we will know whether that happens a little bit later, of course. And that's that's neither here nor there. So we've got to pay a little bit of attention in that. Okay, I think we're almost ready for our break here. So what we'll do is we will take a break here, and we will pay a few bills. And when we come back, we're going to talk just a tiny bit more about the gold market, because I think that is going to be a big one, to the downside, not to the upside. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we'll wind up the show here to remind you that the Treasury bonds and Treasury notes did not have an increase in open interest in the move up yesterday. That is a negative connotation. We've already reversed quite a bit this morning, as we mentioned earlier. The gold and silver and the precious metals also did the same thing. There was no increase in open interest in that, so that's also viewed as negative from a technical basis. So keep those things in mind. Now, these can change dramatically. We'll check them tomorrow. And basically, in the stock indices, there was no change in the open interest in any of those, with the exception of the S&P, which gained about 27,000 contracts. But when you have an open interest of 3.1 million, that is, 1/10 of 1%, which is basically, not very much at all. So we'll, find out now that the foreign markets, the DAX and the FTSE have not reacted very much. The Asian markets opened higher and then sold off a little bit. So right now, that number of 2745 in the E-mini S&P still stands as the 61% retracement, but it's still, really early in the day, and you can't really make any forecast on something that narrow, at least early in the morning anyway. So those are just a few of the things that you want to keep an eye on today. Tomorrow we don't have any guests, but we have the last day of the week, which is always fun. Happy Friday. And we'll have some, I have something that I'm going to share you from an astrology basis that also gives you some indication that these markets do have cyclical characteristics that are related to the planets. But again, it's only probability. It's never certainty. That's absolutely important. So keep a very close eye on that as you listen to that. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!